Some investors believe there is money to be made in muni bonds. So should you buy, sell, or hold municipal bonds? Joining us now is Marilyn Cohen, president of Envision Capital and author of Surviving the Bond Bear Market, and George Friedlander, senior muni bond strategist at Citigroup. Guys, thanks so much for joining us. Marilyn, let me start with you. What is really the state of muni bonds? I mean, a lot of the public has been scared off. How do you see it?
I see their fears well-founded. I mean, the two things that need to be done sound simpler than they are, and that is the states, cities, and counties need to balance their budgets for real. No more sleight of accounting hand, no more one-stop deals like lease sales back that are going to give money once and only once. And I think that better disclosure. And until we get those two merging, your retail investor is going to continue to vote, and they're voting out of municipal bonds and municipal bond funds.
Yes, but George, the real concern here is that there could be a contagion of defaults. And do you really feel like we're in that kind of condition? Are you that concerned that municipality after municipality is going to be in default?
Absolutely not. I mean, we are going to see some defaults at the margins among weaker cities, smaller cities. But aside from that, I think the predictions of massive defaults are way overstated. They come out of, I think, a misunderstanding of the difference between a budget problem and a credit problem.
Marilyn, the Rockefeller Institute in New York says that revenues to states have gone from -6% a year ago to +7% over the past 12 months. And as you know, governors in both parties are slashing spending everywhere. Is it possible that the municipal bond market is oversold?
It is possible, but I think that it can stay oversold for longer than we think. It's a small market in comparison to the other markets, $2.9 trillion, almost totally the majority owned by individual investors. And Larry, people buy munis not for total return, but to maintain and preserve their wealth. So until the waters are really safe, I don't think muni investors are going back in for a little bit of a time here.
But George, that makes me think there's opportunity out there. I mean, it sounds like all of these muni bonds are getting painted with the same brush, and there has to be buys out there. What are you looking at?
Well, we're looking pretty far along the maturity spectrum, out 15 to 20 years, but advising investors to look at very good quality paper. We think there is going to be an opportunity in medium quality paper, the A's and A1 type paper, but there's been so little supply of that kind of paper so far this year. I'm looking to around April or so when supply bounces back up. And I think there's going to be some pretty good long-term values out there.
You know, George, what about on a state-by-state basis? Because a lot of investors tend to invest in the munis that are in their state so that they get the tax benefit there. Is that a wise policy right now, or would you advise more diversification?
I would advise more diversification than investors have had in the past. I'm telling investors, well, if you're only in your own state and there isn't a lot of paper in that state that's really good in quality, well, go out a few more years of maturity and you pick up yield, and that will pay for the tax of going out of state. So we're doing a lot more of that than we have been in a long time.
Marilyn, would you buy a state credit? Give me a state that you actually like and would buy.
Virginia, doing everything right. Tennessee, right on their heels. Those states are in better shape than most. They seem to be able to live within their budgetary means, although they are small states and they are small issuers. But still, I'm just like George. For the first time, I'm telling California residents, New York residents, you should tippy-toe outside of your state. You should diversify, because you're going into municipal bonds as a safe haven, not as something that you could potentially lose a lot of money. So the answer is there are states out there that are doing it better than others, and I think people should invest in those states.
George, a lot of people talk contagion, but is there really a contagion effect if, some munis go bad? Because it strikes me it's not really the same problem as the banking problem. They're not lending to each other. If a muni goes bankrupt, it's a little bit isolated.
I think the contagion problem is a little different from that. What's happened is that because of all the fears there are in the muni market, that bond fund flows have turned sharply negative. That has affected even the very best quality paper, AAA paper that's yielding 125 basis points more than it did at the end of September. That's contagion, even though it's not the kind of credit contagion.
But it's just psychological. It's not real.
Oh, it's psychological, but it is certainly affecting muni fund flows. And bond funds are a very important part of the demand side for the muni market, particularly now that we've lost Build America bonds that were bought by institutions that didn't need the tax exemption. We have a thin base of demand right now, and the bond funds are seeing serious outflows, and that's affecting all paper, including the very finest quality.
Okay, so Marilyn, what is your advice to the investor who wants the safety, who wants a tax benefit? Where do they go right now if it's not munis?
Well, I still think you could stay in certain sectors of the muni market, like the pre-refunded munis. Use them as a safe haven instead of your tax-free money market. Those are bonds that are escrowed with U.S. Treasuries, not Fannie Mae's, not Freddie Mac's. You can buy a $25,000 pre-refunded muni from your state or any other state and earn 1% due next year. Now, don't dance a jig over 1%, but it's certainly better than 1 or 2 basis points that your money market fund, your tax-free money market fund, is generating. And go into the good quality states. Go into Texas permanent school fund bonds. I talked about Virginia and Tennessee. Alaska, although they have a deficit, it's a manageable deficit. So there are ways to navigate around muni land, just not like we did in the past until we see the dust settle.
Okay, certainly an interesting discussion. We appreciate it, guys. Marilyn and George, thank you very much. Retail